Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello everyone, this is Yazad. Thank you for being here. In today's video, we are going to be talking about the 5 most overvalued stocks in India. Now, one of the biggest worries of stock market investors is figuring out if they are overpaying for a stock. They're often confused to figure out whether a stock is overvalued or not. After all, their buying decision would depend on it. For instance, Warren Buffett prefers to invest in a good business and not based on price. He looks for stocks that are cheaper than their intrinsic value. The price to earnings ratio, the PE ratio, also known as the earnings multiple, gives a quick way to figure out a stock's value. Then we have the price to book value. These two metrics help investors to figure out if the stock is overvalued or undervalued. With the help of Equitymaster's powerful stock screener, we have shortlisted the top overvalued stocks from the large cap space. Let's take a look at each one. Maybe you might happen to own one of these. Coming up first, Godrej Properties. After the recent run-up in realty stocks, most stocks from the space have turned overvalued. From the lot, the most overvalued currently is Godrej Properties. At the current price of $18.50, the company is trading at a price to earnings multiple of 2,270 after considering its trailing 12 months consolidated net profit. Now, the company has posted losses for the financial year 2021, so yearly PE ratio is not comparable. Its current price to book value is 6.2. Record low rates of housing loans are helping realty companies lately. Large players have been able to increase their shares because several developers have exited their land parcels and sold them to their larger counterparts. This year, Godrej Properties became India's largest developer by value and volume of sales achieved. Now, what has helped Godrej Properties is that it has the lowest bank funding cost of 7.3% per annum in the sector due to its financial position and goodwill. Over the year gone by, shares of the company have gained over 60%. Next up, number 2, Adani Green Energy. Shares of Adani Group companies grew manifold since the March 2020 crash. Among the group stocks, market value of Adani Green Energy has increased the most. The sharp rise has put a question mark on the company's valuation. At its current price, the company is trading at a PE ratio of 480. The PE ratio is not the only concerning factor here. The company is also highly overvalued in terms of its book value. Its price to book value is currently over 100. Investors are following head over heels for this green energy company, even though its fundamentals are not looking good. The company has made losses in 4 out of the last 5 years. Its balance sheet is loaded with debt. It has not paid dividends for the past 5 years. Yet, the stock trades at a stratospheric PE. For a weak balance sheet and for a loss-making company, Adani Green's valuations clearly seem to be in a bubble. So why are investors loving this company? Well, they see it as one of the prime beneficiaries of the disruptive shift in the energy landscape, a shift where traditional hydrocarbon-based energy will be replaced by green energy like solar and wind. Since its listing in June 2018 at just Rs 30, the company's shares have skyrocketed to over 1,400 today. Number 3, Adani Total Gas. No surprises here, as another Adani Group company tops the list of overvalued stocks. Adani Total Gas trades at a PE multiple of 333 at the current price. Its price to book value of 101 is clearly much higher than the industry average. Its peers, Indraprastha Gas and Gujarat Gas, trade at much lower valuations. Indraprastha has a PE ratio of 27. The PE of Gujarat Gas is around 30. But for Adani Gas, it's over 10 times higher at 333. Due to these high valuations, market experts have raised concerns. Things got worse when NSDL froze the account of 3 FPIs holding shares worth rupees 435 billion in 4 Adani Group companies. If you look at the valuations, Adani Group stocks have been trading expensively for some time now. Just like Adani Green, shares of Adani Total Gas have been on fire this year. Adani Total Gas, which was incorporated in 2005 and was listed separately from Adani Enterprises in 2018, is the largest private city gas distributor in India. Moving on. Number 4. Avenue Supermarts. Avenue Supermarts is primarily engaged in the business of organized retail and operates supermarkets under the brand name of D-Mart. We all know D-Mart. We shop there. I do. Avenue Supermarts is not cheap by any stretch of imagination. Based on its EPS of 21 rupees, the stock is trading at a PE multiple of a whopping 221. Now, while the stock might look expensive compared to its peers, market experts feel the valuations are justified given that the company is among the fastest growing organized retailers. The company's business model has made it grow exponentially and is now India's most profitable supermarket chain. Even when the company debuted on the bourses with its IPO, the issue price was at $299. The valuations were not cheap even then. D-Mart, since then, has seen a tenfold growth. Finally, on our list, IRCTC, Indian Railway Catering and Tourism Corporation. It enjoys a monopoly in the segments it operates. A few months ago, it was under pressure because of its overvalued status. In October 2021, the company's stock tanked over 45% from its all-time high levels, with the market cap declining to Rs 699 billion. Now, IRCTC is the only entity authorized by the Indian Railways to provide catering services to railways, online railway tickets, and packaged drinking water at railway stations and trains in India. IRCTC has a trailing 12 months EPS of Rs 5.3 per share, and its current price is around 870. Thus, the stock trades at a PE ratio of around 160. Valuations are also stretched on the price to book value front. IRCTC's share price has skyrocketed in recent times on the back of investors' focus on the unlock theme. In the last 1 year, it has gained around 200%. With that, we come to the end of our list of the top 5 most overvalued large cap companies in India. In investing, the saying goes, buy low and sell high. This is usually done by buying undervalued stocks and selling them when they have become overvalued. That is exactly why it is crucial to know how to properly value a stock. Now, while everyone is always on the lookout for most undervalued stocks, finding overvalued stocks can help you implement investing strategies such as selling a stock. You too can use Equitymaster's powerful stock screener, absolutely free, to screen stocks based on both preset parameters or your very own criteria. Think India's top EV stocks, or for that matter, India's most attractively priced stocks, and so on. Equitymaster's stock screener could help you in identifying the right stocks for you, and on the flip side, eliminating stocks that are not meeting your requirements. I have put a link to the stock screener in the description of this video. Do go ahead and screen some stocks. That's all for this week. Thank you for watching, and don't forget to hit the subscribe button and to come back next week for a new and awesome video. Happy investing. Goodbye.